Hey guys, my name is Virginia Kuziomko and I'm a realtor in New Hampshire and Maine. And for those of you who have been checking in, this is my 5th video in my video series. And today I've actually invited Jennifer Winnis from Bluewater Mortgage to join us today.
Hi there.
We wanted to speak to a little bit about mortgage lending and how it can be a tool for you when you're buying your home and what are the most important things about it. So, welcome Jennifer.
Thank you very much. Glad to be here.
Happy to have you. So what I want to start with first is one of the most common questions I get, which I can't answer, is what are the rates right now?
Good question. That's something that when someone calls into us, that oftentimes is the first thing that they ask. And I think the misconception there is that the idea is that there's kind of a single rate for a single product and that they can just call in and we should be able to just spit back a rate to them. And I think what people don't understand is that there are a lot of factors that go into a rate quote. So some of the factors are your FICO score, the mortgage type that you're applying for, the percentage that you're putting down, your DTI, which is your debt to income ratio. There are all kinds of factors that go into making up the rate quote. And then once we enter that information in, then we get a range of rates. So there's kind of a list of rates and then a list of prices. And the borrower can choose from, really what rate is comfortable for them at what price. And that'll affect their closing costs. Either they're paying a little bit to get a lower rate, or they're getting credits from the lender for taking a little bit higher rate, and that can end up offsetting their closing costs.
Okay. You were talking about rates. Now, are those constant or do they change?
They change daily.
Okay.
They can even change within the day. And usually, mortgage-backed securities are being exchanged all the time, and usually lenders are only adjusting their rates once a day. But depending on how volatile the market is, they can change within the day. So just typically they're definitely changing on a daily basis.
Okay. And let's see, I am checking my notes because I don't have that great of a memory, so I apologize. Let's see, if someone's asking me, how much do I have to put down on a house? What would your answer be?
That's a good question as well. And there are all kinds of programs out there. For the average borrower, most people, there are programs that they can qualify for that require only as little as 3 to 3.5%. We have some programs that only require 1% down, and that would be for people who have really good credit. But it is out there. And then there are several programs that only require 0% down, and that's a wonderful. If you're a veteran, you should definitely be talking about VA loans if you're a veteran, because that's a 0% down program for them, and also through USDA there's a 0% down option.
Okay. USDA, I may know what that means, but what does that mean to your average consumer?
It's a rural development loan. It is a government loan. It is a loan that is really aimed towards people who have low debt and really good credit and are still maybe on the rise in their income capacity. So, and there are limits to how much you can make to qualify for that program, and there are also limits to where you can do a USDA loan. So it's not for everyone, but it is a great option. It's a wonderful, if you can fit into that category, it's a great option.
Mm-hmm. So it sounds like what you're saying is that there are different kinds of loans for different types of people. So if I'm just looking for a home in a town and I don't know what loan programs are provided that serve that town or my income, it sounds like I should speak to you before I even start looking. When should someone start talking to you?
Yeah, you should. If you're thinking of buying a home, refinancing a home, it's good to talk to a mortgage professional as soon as possible. The reasons for that really are it helps to establish what your price range is. So that's kind of the obvious thing. But it also allows you and your agent to not waste time on properties that you can't afford or that don't fit the loan program that is right for you. Some of the programs that I mentioned, like USDA or VA, FHA, Those are all government loans, and they're very particular about the condition of their property. And so it's just, disappointing for people if they're attached to a property and they put a lot of emotional energy into that. And then once they come and talk to us, they find out like, oh no, that property's not going to work,
Right.
or you can't qualify for that.
It's
so
like going shopping and leaving your wallet at home, maybe.
Right. And in the meantime, they've spent a lot of time, so if they're in a time crunch, that could be a problem. And it also, just in talking to us first, allows you to see what issues you may need to work out. There may be something in your credit that you don't know about. There may be things that you're planning to do that really aren't going to be the best way to move forward with a purchase. Are
there any actions or behaviors that people should stay away from if they're thinking about buying a home or refinancing?
Yeah, if you're thinking about buying a home or refinancing, that's not a good time to go and take out all kinds of open new debt. It's not a good time to decide you're going to max out your credit cards, or definitely not a good time to go late on anything. You want to be as timely as possible on all of your payments. Not a good time to be transferring money around either. A lot of times people are moving money around, or they may decide, my down payment is going to come from, I'm going to sell off my boat or something, and that's where my down payment's going to come from. And you want to be careful about that. Not that you can't do it, but there's a certain way that you're going to need to document that sale to make your mortgage process smoother. So it's just always a good idea to talk to a mortgage professional as soon as possible when you know you're in the market.
Okay. I've talked to some people in the past who are thinking about buying, and they're concerned about their credit. Now, what effect does that have on getting a mortgage on a property, and what is bad credit, and are there any tools that people can utilize to put themselves in a better buying position with their credit?
Right, that's a good question. Credit is one of the biggest pieces of the mortgage lending process. So it's very important. Your credit score is used in figuring out the rate that you're going to be able to, and the programs that are available to you. So it's a very important piece. Really, if your credit is in good shape, if you're in the 700s, you don't have a lot to worry about. There are all kinds of great rates and great options available to people that have maintained their credit history. They've made timely payments. They don't have any derogatories. They're going to be in good shape for great rates and lots of options. If you're in the 600s, you don't have there are still lots of good options out there, definitely options available. You might pay a little bit more, but there's still really great options out there for people in the 600s. When you're starting to get below 600, your options are starting to be limited, and you're going to pay more for your rate.
Okay.
So I would say, did you ask me how do people know their credit score? I don't remember.
I mean, you kind of touched on varying levels of the rates and how it has an effect on the programs and things, but one of the things I really wanted to touch on was if someone has what they feel to be lower or in a bad credit situation, maybe they've had a repossession or they've had a foreclosure or something on their credit history that would a derogatory mark. Mm-hmm. Are there any programs or any advice that you give them to put them in a better buying position?
Yep. Yeah, we work with a company called National Credit Care. They are they're credit specialists that we can upload, obviously with the client's permission, we can upload their credit report and their contact information to National Credit Care, and then they will get in touch with the client and start working with them on how to get their credit to a place where they can move forward with their financing goals. And I usually refer people to them if I'm seeing a lot of serious derogatories and I know that there's really not a lot of options for them, or if they're even kind of borderline, maybe there's programs available for them, but they're right at the cusp of where, maybe in the low 600s, and if they could just get their credit score up by 15, 20 points, they're just going to have so many more things available to them and such better pricing of it. You know, they're not going to be paying as much for the competitive rates.
And how long does
So-
something like that take? Like, do you have any
It
success
depends.
stories of someone who's utilized this company, and how long did it take them to get their